The S&P 500 closing at a new record high for the second straight day. REITs, utilities, and communication stocks leading the markets today, all up 1% or more for the session. The new highs come as we officially enter the longest period of economic expansion in U.S. history. But the chartmaster says there is one stock that sat out this decade-long bull run that is about to break out. Walk over to the plasma, Carter. Why don't you show us where you're looking at?
Come on, man.
Come on. Here we go.
Get up.
So the mighty Goldman Sachs, if one can imagine this, of course, has produced negative returns since the market's peak, the prior bull market high. And it looks like it's coming to life. It's a Dow component, and I think the thing to do is be long. Here's the start date. It's not arbitrary. I just picked, it was a Thursday. We know it was October 11th, 2007, and we had our financial crisis and our bear market. S&P drops 50%, Goldman drops 80%, and then from that day, that Thursday to present, this is what one has as an investment experience being in the market versus being in Goldman. And that is pretty darn bad. The issue is maybe something about to change. Let's move on to the next slide and take a few charts and figure out what we can figure out. Another way, that comparative chart, another way to do it is to do a relative chart. So now I've got Goldman on top, same starting date, and now I've got relative performance to the S&P. Basically, Goldman is right at its 09 financial crisis low relative performance. It's quite remarkable. And yet, it's holding. Let's go forward one more and zero in on this. So here it is now on a one-year basis. And what appeals to me is that we're trying to fight here and trying to put in something of a relative bottom. Now, this is relative to the S&P. Watch relative to its peer group, the S&P Investment Bank and Brokerage. Much better, right? So compared to Morgan Stanley, which is more rate sensitive, and other stocks in the basket, Goldman is actually coming to life. And that is appealing. A few more, and then I'm done. Now, this is, on a longer term basis, the relative performance to the peer group. And I think you could draw the line several different ways. Watch what comes next. One way to do it is this. You have a head and shoulders bottom on the relative. You also have a move above the downtrend line. Put it all together, we're just getting into the point where we've moved above that line. I think that's very important. Now to the absolute chart of Goldman itself. We've just broken above this line. Our 150-day moving average is just starting to turn. I think what you've got here is something on the order of this, and I want to draw the green arrow like that.
All right.
That's it.
Carter, why don't you come back over to the desk, and we will trade it in the meantime. Tepper, would you buy Goldman Sachs?
I'd prefer J.P. Morgan here, but I think when you look at these banks in general, Goldman basically, they just increased their dividend by nearly 50%, right? So in the past, this has been a stock that attracted value investors. Now I think you have some of those dividend investors who are actually interested in stocks like this as well. I mean, you're getting a good yield with half the valuation of utility, so it's not a bad play.
What's that term you use for charts you don't like? The worst chart you've ever seen?
Worst chart I've ever seen.
Is this one of them?
No. I mean, so here's the thing.
Really?
One of the things I think is really interesting about Goldman is that, it's been trading in this range, obviously since that initial ramp on the V reversal back in January, and it's been trading in this range, has been unable to break out. It shows very poor relative performance to the money center banks. Wouldn't you agree? At least in 2019. Sure. And what I see something different. I see the fact that Morgan Stanley and Goldman Sachs have been unable to participate with their larger money center peers. I think that's bearish. And then I look at
they're different banks. That's right. They're different.
No, I understand. But then let's go over to Europe for 1 second and look at the Euro Stocks Bank Index. It's one of the worst charts I have ever seen.
That's the one.
No, that is the one.
Right.
Okay,
the worst chart
that is the
That's the one.
And then when you think about what's going on with Deutsche Bank, and you and I over a beer last night were talking about this. I don't know. You're talking about Natixis's H2O
I actually
fund,
like
corporate bond fund.
If he was bullish on it, I'm also bullish on UniCredit, though.
But he's talking about the liquidation of one of their credit funds, and I'm saying to myself, maybe there's a reason why Goldman Morgan don't act well. Maybe there's a reason why the SX70, the Eurostoxx Bank Index, cannot stick its head above water.
So you're saying they're exposed to Europe. You say the exposure
I'm saying
to
that there may be some
in
things going on. The reason for this underperformance in the banks in general might be like the canary in the coal
mine. But it's not a bank, right? I mean, it is, and it isn't tied to rates the way sort of online brokers.
But it is, though, Carter. Hold on a second. These guys have been lending money to all these private companies because rates have been so low.
Money center bank.
Hold on, but they've been taking in public.
It's not a money center bank.
I understand that.
Well, I mean, they're two different businesses.
Okay, but I'm telling you that actually, when you think about these guys as investment banks, shouldn't they be acting better in this environment? If they don't have the rate exposure, we're talking about, if they don't have the rate exposure, why aren't they acting better?
Part of the opportunity here is how bad it is. I mean, what I was trying to show there, the thing's actually lost you money for a decade from its prior high. But its day-to-day action, and most specifically relative to Morgan Stanley, is a bit better.
Look, Goldman Sachs, more than Morgan Stanley's business changed entirely by the regulatory environment. They were neutered. They were neutered in terms of the ability to take leverage. They've also had a couple high-profile, difficult situations they've gotten themselves into.
And when things went out
that are not resolved,
they'll never have the ROEs that they had at those peaks.
That's right.